right. Well, how's everyone doing today? Thanks for joining us. We're going to be talking about the very interesting topic of global regulation around the world. We have great representation from across the space to shine some light on where regulators are maybe working with crypto companies, where they're maybe more challenging to work with, for lack of a better term, and where the regulatory innovations really happening. Where are people really getting creative and thinking outside of the box? And we'll also talk about specific regulatory regimes that our panelists hail from. So we'll go around the docket. I'm Frank Chaparro, editor-at-large at The Block, and we can just go around the horn. Justin Sun, of course, of Tron, joining us as well. Maybe we can do some quick intros, although, Justin, you probably need the least introduction of us all, but we'll start with you.
Hello, everyone. I'm the founder of Tron. I'm also the Grenada WTO ambassador, and also I talk with all the regulators around the globe to, I think, build crypto space, and also at the same time collaborate with the regulators in the world to make crypto a better place.
Mauricio?
Yes, thanks. Good morning and good afternoon, everyone. My name is Mauricio Beugelmans. I serve as the Chief Legal Officer for Okcoin, the exchange under the OKG Group umbrella. For those of you who are not familiar with our company, we are registered with FinCEN here in the US. We're also registered in Malta for our European operations, and we've got several applications pending globally. So I'm glad to be here. Thanks for having me.
And last but not least, our Deribit representative.
Thanks, Frank. My name is Luuk Strijeres, Dutch. I'm the Chief Commercial Officer for Deribit, and Deribit is the largest options platform in the crypto space globally. Based in Panama, our parent entity is Dutch, so we have Dutch founders originally, and split the company in two a few years ago because of regulatory reasons.
Well, maybe we can start there. What made you make the jump?
In the end, we decided to leave because of regulatory reasons, as mentioned. The reason was to protect our competitive position. So it's not that we're afraid of regulation or that we shy away from adhering to local requirements. But back then, it was the time that the AMLD, the Anti-Money Laundering Directive, was implemented in Europe, which was different. The implementation was different across every country. So every country had the freedom to implement their own view, essentially, where the Dutch approach was the most strict one, which caused a lot of Dutch crypto entities either to cease activities or to leave. We did the latter. There's not a lot of platform or trading activity left, especially not in derivatives. The issue was extended KYC and AML requirements, where the proof of funds needed to be proven, as in documents, salary slips, inheritance statements, all of that stuff was a requirement, which none of our peers back then and still nowadays are not required to ask in their respective locations. So we needed to make sure that our competitive position was protected, and hence we decided to leave to Panama. At the same time, we implemented quite strict AML and KYC requirements. So I think we rank amongst the top now, but we are still unregulated. That might change because of Panama legislation, but at the moment we remain unregulated.
Justin, you obviously engage with a lot of regulators as the founder of Tron, but also in your position as a representative to the World Trade Organization. What is top of mind for them, given the backdrop of the market, a lot of platforms have not been able to navigate that backdrop, or in the process of bankruptcy. A lot of people have lost money. So I'm sure they're concerned. What concerns are they expressing to you?
Yes, I think first of all, the perception of the whole industry, I think, really matters as well. Even, I mean, we can argue, right? This is like decentralized technology, you know, Bitcoin, like Ethereum, like Tron, all different decentralized platform is basically empower lots of people, lots of business. You know, has been a huge like business benefit everyone. But still, I mean, when I think when the headline, right, is like all the different like companies go bankruptcy and Luna, like UST go to zero, you know, most of the regulators, I think, in the world, they are not like focused on crypto like 100%, right? Most of them, they cover lots of other financial regulations as well. So that's why when they see like all the headlines, they need time to process, like, and also, for example, like I need to spend a lot of time, right, to tell them like what happened in Luna, why it's not gonna happen to other like crypto protocols or entities in terms of customer protection, things like that. So, but I think like the backdrop, just as you said, like in the industry, I think really make it difficult to explain all the regulators in the world. So that's why I think, first of all, if we really want to have a good position in terms of like convincing like the financial regulators in the world to have a positive approach to the crypto, I think the growth of the whole industry and the consistent and the sustainability become like very important. And also, of course, I always advocate embrace the regulators, right? To explain to them like face to face, talk about like crypto, right? To give them like a vivid example, like how crypto enable business, make payment like easier for other people to receive, send money in a very cost-effective way. I think we have lots of positive like example, like cases. And also, of course, I think collaborate with regulators, go after the bad actors is also very important, right? We see, I think recently, like OpenSea, like Coinbase collaborate with DOJ on like catching like inside traders. I think this is also lead a good example. I think for our initiatives, for example, on Poloniex, we also receive like requests from regulators like all the time, right? We help them to catch bad actors, which I think it also really helps, right? Regulators, you know, when they collaborate with you, they trust you as a financial platform. I think this is also lead to a lot of good sentiment on the crypto. So overall speaking, I think I advocate like a way to embrace regulation, to make regulators really comfortable to collaborate with all the good actors in the industry, to turn crypto into a really, I think, just like most of the financial institutions in the world, right? On one hand, we benefit everybody, but on the other hand, we also are gonna catch all the bad actors in the industry.
I think we've lost Frank.
Yes.
So
Sorry, we need better,
lost like
both
of them. Yeah.
we need better Wi-Fi in
yeah,
our
so
bubble.
you know, I'll just jump in with what you know, and echoing what Justin was just saying. You know, I came to Okcoin after a 22-year career in practice of financial markets and products, representing you know, traditional finance industry. And so, you know, regulators globally, certainly there are cultural differences that are important, but the way we view it here for crypto is that there's just some kind of basic concepts that are consistent throughout every regulator and every jurisdiction that we look at. The ecosystem, the crypto ecosystem, I think, is recognizing it if they haven't already. And the concepts, again, similar to what Justin was just saying, are the first one is obviously the AML concerns. That's something that every regulator is going to impose. And I think by and large, the industry, because the AML issues have been present from the inception, especially when exchanges started coming online, I think that's something that the industry has done, frankly, a pretty good job on. The second and third pieces is investor protection, right? And so again, as Justin was saying, investor protection is always going to be at the forefront of the regulators' minds, and that's achieved through a combination of education, of disclosures, and of risk management. And not just risk management as an exchange or as a provider of a service to customers, but also, for lack of a better term, on some level, saving customers from themselves, right? And that's a very difficult concept, I think, for us in the crypto industry, that, well, wait a minute, we trust our customers, we trust that they can make their own decisions, that they understand what they're doing. But that's something that again, that regulators are going to be imposing if they haven't already. And the third piece, which is more current, and you're seeing with the SEC case on insider trading and the related Department of Justice case, is integrity of the marketplace. And so those are the three kind of general categories that, again, I think we all need to be aware of. They are global categories, and I think that as Justin was saying, again, a big piece of that is working with regulators, making sure they understand the industry, and having a say in how they approach each of those three categories. Did we lose Frank again?
Yes.
Okay. Okay.
Perhaps I can chime in from our side when it comes to these items. I think what sets us apart from the rest is the focus on retail. So a lot of the platforms have a very heavy focus on retail. You can see that in the advertising spend, Formula One, etc., that kind of stuff. Those ads are being bought for one reason, which is to attract retail business. So the retail offering rules are applicable, which essentially, what Mauricio was saying, are there to protect the retail investor. So as a platform, we actually have an inverse model. We hardly advertise or don't advertise. We have what we ourselves call a reverse solicitation model. So clients come to us instead of us going to them, because we exactly don't want what you called protection from themselves. We don't want people to trade on our platform not knowing what they're doing. So we try to activate sophisticated clients, which typically is a very large institutional base, and around 20% retail. But those retail traders are active traders. They could be traders themselves for banks, market makers, etc., and know what they're doing. So we tend to shy away from actively marketing our solution, just to avoid attracting people that don't know what they're doing and lose money. The same essentially applies if you look at our product shelf. We don't have a lot of coins. We only have 4 assets, essentially: BTC, ETH, USDC, and Solana. And we have options and futures based on these underlyings, but we don't have hundreds of different coins. So I think if you look at the regulatory focus, it's retail protection, that's for sure. It's KYC and AML, who's trading on your platform. Of course, we implement very strict measures there. But the retail protection focuses on, I think, 2 things. One is leverage, and do people actually know what they're doing? And 2 is coins. So for platforms that have hundreds of different coins tradable, the regulator wants to see what kind of due diligence do you perform, what kind of rules apply when you launch new tokens, is it a security or not, what are the documentation requirements, and all of that stuff. We essentially, it doesn't apply to us. So if you look at the regulatory discussions we've had and the numerous lawyers we've spoken to in all the jurisdictions across the world, a platform like us offering derivatives only, so not spot, not crypto conversion, so no fiat, it's in a let's say, undefined bucket still. Most countries focus on crypto conversion, retail protection, and coins, as in coin offerings. And the actual derivatives, the more sophisticated stuff, is typically unregulated still. Frank, you're very soft.
Yes, the voice is very soft. I can hear you, but in a very soft way.
Yeah. And actually, while Frank sorts that out, maybe I think Lee had a good question on the chat. Lee's question was, do any of you foresee that cryptocurrencies will develop a self-regulating organizational framework that becomes supranational? And he references, aside from the rules of math and code, of course. So Justin, Luke, if you want to tackle that one, then I'll come after you, and then hopefully Frank will be all sorted out.
Yes. First of all, I think crypto regulations, I think definitely different from like different regions. I think, of course, I think right now we see like Caribbean, like and the offshore place, Panama, of course, is one of them. I think Malta, those places, I think, has the most flexible crypto regulations. So that's why I think those regions also benefits from like developing a very flexible regulatory framework. But also, of course, I think the regulations in, for example, China, US, like European, which is basically the biggest region in the world, I think will be like very complicated. So that's why I foresee in the future, in the first stage, we will first have, I think, kind of the global consensus of certain standards, right? Just as we just discussed, including like AML, I think travel rules, OFAC, right? Those things is like basically apply like in universal like basis, right? So like all the exchange in the world, at least they understand we need to have some certain of the collaboration here, right? To prevent like money laundering, like terrorist financing, like all these kind of the global standards. And also, of course, like investor protection, and also integrity of the market. I think even different countries probably have different cultures, but at the end, I think the general principle, we can have a global consensus, right? And then I think on the global consensus, we will develop different regulatory perspective based on different requests from different regulators. I think that's the second step. For example, I think right now, let's take like Binance like example. I think Binance right now, they have different website, right, in different region. For example, like Binance US, they started to basically make Binance US completely different from like Binance.com, right, which apply to US regulation like completely, right? So I think Okcoin have the same like structure from like OKX. So that's why I think that is a good example, right? I think in the future, if you want to operate in the like basically the main countries in the world, like United States, you need to have a completely different like website based on different standards, and the rest of the world probably have like a global consensus, global standards, and based on other like regulatory requests. For example, I think in China, India, like probably in the long term, you also need to have a completely separate like website, right, to apply to their regulations completely. That's like the future, what I foresee.
And there's a dichotomy, right, between let's say, the enforcement agencies like the DOJ, the Department of Justice in the US, and the policymakers and the regulators, because the former is able to leverage the power of the blockchain, the transparency of it, to track down nefarious actors. So that's something I've noticed, where you have enforcement agencies a bit more pro-crypto than maybe the regulators, which may want to have more control over it.
Yeah, I mean, certainly what the observation that we've been, and actually Lee's comment was very insightful from my perspective, because it kind of flags the overall issue that we're dealing with, which is that crypto, obviously starting with Bitcoin, it is, to use his term, supranational, right? From the get-go, it's a borderless ecosystem. And that's very unique, frankly, in the history of anything that holds value. And so because it's unique, and it was like that from the beginning, it wasn't like traditional finance, which developed in each individual jurisdiction and then became supranational. This Bitcoin and crypto is supranational from inception. So if you think about it, that's very difficult, right? It's very difficult for all of us who are in the industry trying to grapple with regulatory schemes. So what you're seeing is you are seeing patchwork. And I think that's going to be the pattern for a while. And you see certain jurisdictions, in addition to what Justin was flagging, you see the Swiss with VQF, you see the Bahamas with the DARE Act, you see Gibraltar with DLT. You know, some jurisdictions have jumped ahead and issued out legislation, which is by no means perfect, but at least it's legislation that's specific to crypto, that provides a licensing regime, it provides a regime for certain products. You see other jurisdictions like the US that are, you know, kind of trying to figure it out. There's, as you mentioned, Frank, there's attempts by regulation through enforcement by the SEC. You had the Lumens Gillibrand bill that was floated out that doesn't seem to be going anywhere. So the US is in that kind of middle ground. We'll see what happens. You never know from one day to the next what's going to happen from a regulatory perspective. And then you've got the wait and see jurisdictions, you know, one being the EU 27 with MiCA. Everybody's waiting for MiCA. Everybody's anxious for MiCA. We've heard all kinds of things that it might be a year, it might be 2, it might be 3. So, and this whole time we're all struggling because, as Lee pointed out, we're dealing with a product for customers and a utility for customers that is supranational. That's one of the things that I think, speaking for myself, a lot of folks know is attractive about crypto, and is really one of its incredibly strong pieces, is that it does open the door, you know, especially to underserved countries, things like that. But the regulation with this patchwork, it's going to take time for it to develop and for there to be some consistency across most major jurisdictions.
Luke, I want to ask you a funny question. Did the Dutch government ever try to woo you back from Panama?
No, I think the opposite. I think the Dutch government is not that keen on crypto as a whole. We left. Binance just got a fine. Other companies have had problems or warnings. No, so it's we left. We still pay taxes in the Netherlands, so it's not like a Panama paper structure. It's still the entity is owned by a Dutch entity, but we've never been wooed back. I don't think we would like to be wooed back, or we might like to be wooed, but we won't take a quick decision to move back, because I don't think MiCA is like a global solution. I think what Mauricio was telling, like patchwork, I think globally, if you look at derivatives trading, I think the travel rule makes sense. So that's like a global enforced solution, which makes sense. Let's see, let's monitor transactions. But some countries, and the US is a good example, have perhaps an overreaching approach, which might kill the industry, or at least the local participants. And that's, I think, a bit what's happening with MiCA as well. It might be too strict to actually encourage the crypto space, which forces participants to leave to countries elsewhere. I think there's like a dual approach. Some countries have an all-encompassing regulation, like Bahamas, and what Panama aims to do. They want to welcome everyone in the crypto space and give like an all-encompassing license. And then there's other countries like Singapore, for example, where they monitor pieces, and these pieces over time will expand. Not sure which one is better. I think the Bahamas and Panama approach is attractive for the economy, as in come to our country and we'll create a vibrant environment. I think Dubai and Abu Dhabi are trying to do the same. And over time, of course, these regulations will become stricter. But the coherent approach where everyone has like a similar mindset doesn't exist yet. And I think the question Lee asked is whether there will be some solution where an crypto platform body would be created that would be overseeing everything. I think it will never be accepted by the respective countries. So even though it's a great idea, we would gladly create some kind of partnership model to discuss certain topics. I don't think the countries themselves would accept the outcome or the conclusions of this body. So every country, and especially the big ones, have their own mindset and their own politics, which will conflict with I think what the industry intends to do.
But do you think that there is reasonable? Is there a reasonable concern that there is a race to the bottom type of situation playing out?
To the bottom, as in?
As in, everyone's just going to go to where the regulators are going to be the least.
Oh, no, the opposite. I think what clients want. So we have an institutional dominated platform. So 80% approximately of volumes and assets, etc., is institutional. And we do what the client wants. Not so much, of course, the regulatory angle is important, but I think the driver would be clients. So clients are very keen on custody. So making sure their assets are secure and that they're like integrated with custodians. So we have Copper, Kobo, we're integrating with Fireblocks to offer clients choice. That's what they're focused on. They like to see balance sheets. So they like to see the financial health of the platform. So I think you need to consider stuff like audited financials, proof of coins, to make sure that the assets of the client, especially nowadays with the recent problems, people want to see that their assets are actually there. But they're not that much interested in the regulation as such. They want to make sure that financial health is okay, the assets are there. Of course, technology needs to be secure, so it should be zero concerns for hacking and that kind of stuff. But I think those days are over. I think the KYC standards and AML standards have already resulted in companies like Jumio, Chainalysis, which are being used by the majority of the industry, and OFAC, and all these sanction lists are being vetted. The Russians are being blocked. The biggest concerns is already taken care of. So in the more centralized platforms, the larger ones I'm talking about, the zero KYC or DeFi solutions, that's another topic. But I think in the end, the large institutional clients, they want to make sure that their assets are secure, especially if they have third-party assets. So if it's a prop shop, it's a different argument. But if it's a large multi-billion-dollar asset manager, this portfolio manager wants to say to his clients that don't worry, your assets are secure because I've checked whatever X, Y, Z. And one of the key important ones, besides the basic stuff, would be, I think, custody. So I think what you will be seeing in the near future, because of Three Arrows, Babel, and Luna, etc., is less capital allocated to the platforms and more capital moved to preferably integrated custodial solutions.
Mauricio, in your professional opinion, what does the Three Arrows meltdown mean for potential new regulations around the world? What we saw, right, was a lot of counterparty risk that wasn't properly managed. We saw effectively one fund be the largest counterparty of several different retail platforms. Those retail platforms in turn did not necessarily detail or explain the risk to their customers properly. I imagine there's got to be some sort of backlash to that.
Yeah, well, and I'll just caveat by saying, Frank, since you asked for my personal opinion, I'll give you that. So my personal opinion is not that of my company, Okcoin. So for Three Arrows Capital, I think there's two likely results from that. The first one is going to be a recognition of managing counterparty risk, right? So it's something that I think whether you're an exchange or a counterparty to a fund like Three Arrows in any capacity, you've got to make sure that you have adequate processes in place to manage your counterparty risk so that your exposure in those situations is corralled or limited in some fashion. I think the second piece, which is broader, is just kind of trust in the crypto trading ecosystem. And I think that if you hear go anywhere on social media, there's just a lot of noise, especially for your kind of average retail participant in crypto. And I think that Three Arrows Capital, and the crypto winter, are damaging to a certain degree the trust level that have been building up, right? It's almost like 2 steps forward, 1 step backward. So I think that I don't foresee regulators get moving, if you will, when there is a general collapse or semi-collapse in the marketplace, or when there's extensive damage to retail. Right. Let's be frank. At the end of the day, it's retail that drives your legislatures globally to take action, because those are the folks that vote, and those are the folks that they are that they have to answer to. With all that being said, though, Frank, I'm cautiously optimistic that there have, and again, we can discuss the various actions by the SEC, et cetera. But I'm cautiously optimistic that there has not been an immediate backlash. And I think that's because even though we're in a crypto winter, even though we've had Three Arrows Capital, what you are seeing is you're seeing the strong participants in the ecosystem stand firm. And you're seeing the crypto in general come through this in a way that it's damaging, but it's moving through it. I do think as well that it helps a little bit that there's some correlation to the stock market. Right? The stock market is not doing well, so it mitigates a little bit of the effect of the crypto trading ecosystem is an outlier as to people's overall sentiment. So I do think there'll be some effect, especially as I said with counterparty risk management. I do think there'll be some effect on trust. But I'm, again, I am comforted, frankly, and how industry participants are kind of working through this, and the regulators. We'll see what happens. It's really hard to judge it, but keep an eye on those factors, which is if retail really gets damaged, you could see some regulatory overreach, but we'll have to monitor it and wait and see.
Yeah, just send any global regulator a chart of Netflix or another tech stock to show that crypto is not the only place where people are losing money. Justin, one question I have for you is how do regulators strike a balance? How can they protect consumers from things like Terra and their associated platforms like Anchor, while also ensuring that blockchains remain, or the ethos rather of the space, and blockchains as well, blockchains ecosystems remain decentralized?
Yes, first of all, I think in terms of blockchain infrastructure itself, I think decentralization is the key. That's also I always emphasize to all the regulators around the globe, because one of the reasons why blockchain like crypto has value is because it's a decentralized infrastructure, right? And also, I think we need to emphasize also not only on the decentralized feature of the protocol, but also actually how it can benefit everyone globally, right? So basically, I will basically position the decentralized structure is like a trust machine, right? So if we can keep the infrastructure in a decentralized way, so everybody in global basis can trust the blockchain, and everyone can become the participant of the blockchain, basically. But if we put any crypto regulation in only one country point of view, it will destroy the crypto features, and also it can't be trusted by anyone in the world. I give a good example for recent, NFT platform developed in China. People change name to be like digital arts, which is completely based on alliance chain, which I mean all the node is permission based. So basically, if you want to run any nodes on the alliance blockchain, it needs to be registered on government, regulation. You have this kind of alliance chain. But one of the biggest problem for alliance chain is it's impossible for any global users to join the network. And it's very hard for people to develop their own trust on the network if you only limited this to permission based and also basically alliance chain, this kind of the mode. I won't deny it. It's also have some like use case, right? If like some banks, they want to develop alliance chain, countries can use blockchain as one of the services. But just like, Facebook, Google, if you want to build a really useful like Web2 application used by everyone in the world for Web3, like blockchain based, you need to be decentralized and permissionless based blockchain. So I think lots of the regulators, after my explanation, they get it, right? They know, right? If you want to be globally competitive, you need to have a very flexible and crypto-friendly regulatory framework, or right, the enterprise and the entrepreneur will move out of the country, right? And it will be like Google developed in United States, and people in Japan, in Europe, you will still, are using Google services. Actually, the regulators lose their local position on global competitive advantages. So that's why I think that's how I educated them, try to make regulators also compete in a global basis, right? Which I think provide a good framework for entrepreneurs.
Yeah, I think we've seen that play out between the UK and France post Brexit. I think there's a sense that maybe Paris can take some market share in terms of the number of fintech, crypto, financial services jobs. So at the end of the day, that's an element as well. You want to be the person, or rather the entity that is bringing jobs to a given country. We're seeing that play out in the Bahamas. I think already they're talking about thousands of jobs. Um, so that's almost the bottom line, right? That's the pitch. We're going to create innovation. We're going to create wealth. So let's ensure that there are frameworks in place that make it not not easy necessarily to operate, but just understandable to someone made this point earlier. It's not so much about wanting to be unregulated. It's just knowing what the rules of the road are so that you can operate. Who's doing it the best?
Luuk, you want to take this?
As I think there's a few countries that do exactly this. What
Gary
you
Gensler has to be top of the list.
so, no, so I think so. Panama is like the Bahamas, like Dubai. I think the mindset is the same. Bermuda perhaps the same as well. Let's create a vibrant industry. Let's create jobs and do it in a regulated manner, focusing on a few pillars, as in KYC, AML, crypto conversion. But the question is, I think, for example, for us, Panama is a tricky one because Panama has been hit by the Panama Papers and are now drafting a new regulation, which might be over strict. The banking sector is not what it was a few years ago. It took me months to get a bank account. So to give you an example, if you open a bank account, you need a bank reference letter. So that's like another bank somewhere in the world that signs off saying Luuk has been a good client for so many years. You have to go to this, in my case, Amsterdam, to get this physical letter, take it back to Panama. It's terrible. Then you need a passport scan of all your pages in your passport. So that's like 60 pages or whatever, something like that. There's no system that can verify automatically 60 pages with stamps and all whatever, all that stuff. That's like Panama requirements. So our fear is that those requirements will be implemented in the new crypto regulation as well, which is unclear still. And I think those are the tricky parts. So yes, we create a very welcoming environment, but if you look at the rules, it might be actually resulting in the opposite, because if the rules are implemented this way, it will push away all potential participants. We can't operate on a global scale if the requirements to verify our client base are like this. So I think in the end, and I think for the same applies to Dubai, the rules are still in the making. It's being developed. So it remains to be seen how these rules are actually formed. But I would really encourage some kind of global approach, regardless where you are. This is going to be the standards. KYC, we're all going to check these, whatever, 10 requirements. If there's a standard to a few of these pillars, that makes all of our lives much easier. And then this race to the bottom won't exist, because the global implementation might be a little bit more strict in whatever, Switzerland, but the baseline is the same everywhere.
Yes. So for me, I think, of course, I think the regulatory framework is really important because it represents certainty. I think certainty is very important for business to be developed, right? So if we think about like anyone in the industry probably gonna violate like regulation, customer gonna be nervous, entrepreneurs gonna be nervous, and the capital will stop to invest in those business if they can't feel like a certain amount of the certainty, right? They will reduce the investment in those industry if they really feel it is uncertain. That's like what happened recently. I think for Chinese-based like stocks, right? So the price probably even going down. Even you might like as strong as just like Alibaba, Tencent, even have impact on that as well. So that's why I think certainty is very important. I think right now the region is doing the best. I will say like number one is Caribbean, right? Bahamas is definitely one of them. Like Panama, and I would say Grenada also try to do a good job. And I think lots of the Caribbean states, for example, like Bahamas, Barbados, is also very active here. all the I think Caribbean states, they have the same mindset. They want to attract business from United States, right? They know like how that's the chance for those states. I think it's digital economy, blockchain, it's their chance. Other than like tourism and their local like agriculture and the fishery business, digital economy is their chance. And then I will nominate like Dubai, I think AUE, and also Singapore. I think they all want to be a very crypto-friendly space. Even we might have some like conflicts as well, but I think overall speaking, they are doing the best. Also, we recently see like France, right? Because they accept like Binance, welcome like Binance in their space. But I think overall perspective, I'm also optimistic. I think globally speaking, more and more countries will try to embrace like crypto. In the end, I think they will find out this is a good chance for them.
Yeah, I mean, Frank, just close this out very, very briefly. Yeah, so look, seeking registrations or licensing in any jurisdiction is a significant undertaking. It's expensive. And so it's really an investment. And the way we try to approach it is, because as Luuk and Justin were referencing, I mean, there's all kinds of jurisdictions that have various advantages and disadvantages, is we try to approach a jurisdiction and evaluate it from a few key parameters. First is, is there a framework in place? Is there legislation in place, like the DARE Act in the Bahamas? The second piece is, what's the customer onboarding process like, right? What are the KYC requirements? Is there simplified KYC for low thresholds? What's that experience going to be like for customers under that framework? The third piece, and perhaps the most important, is that it's got to be product driven, right? What are the products that are covered by this framework? Is it spot? Can we do derivatives? What are the limitations that are going to be placed if we can do derivatives? Can we do margin? Can we offer margin? What kind of limits do we think we're going to be imposed on us if we do margin? And so it's really, what this framework give us the ability to offer to customers. And then thirdly, is just the jurisdiction generally, right? Stability and also gray list. Is the jurisdiction on the gray list? Are they about to get off the gray list? That impacts obviously various pieces, most importantly, banking relationships. So we try to take, because there's so many jurisdictions doing so many different things, some are doing nothing at all, some are in the middle. We try to take a very kind of critical analysis that, again, it's driven by what we're seeking to offer to our customers and whether that fits within the framework. So that's the approach as we try, because we had the same experience, so many jurisdictions, so many different things going on. You've got to figure out a way to approach it so that where you end up is a jurisdiction that makes sense to your business and it makes sense to your customers.
Yeah, and you're absolutely right. I think that's a great point. You could have one jurisdiction that would be perfect if you were a custodian, but would maybe be more complicated or more thorny if you were operating a perpetual swaps derivatives trading platform. It's not necessarily a one-size-fits-all situation. If you could indulge me, Mauricio, what is your critical analysis of DARE?
We certainly view DARE favorably, and so I think the Bahamas did a great job kind of getting out in front of it. It's the elements that I discussed, KYC, product offerings, Bahamas is a respected jurisdiction. I think those are all strong. It remains to be seen a little bit, I think, on the institutional side. Bahamas does have a very strong kind of traditional finance market as well. But we certainly view the Bahamas as one of the leaders globally. And so we've got some relationships there, and we feel like they've done a very good job.
Yeah, that's That's fascinating. And I know that they're particularly interested in what crypto can do in terms of carbon credits and figuring out carbon, neutral policies. And I think that's the one thing that you see with many of these countries that are interested in creating these regimes. Like I said before, it's about jobs, but it's also they've been able to target specific use cases within their own country. With Bahamas, it's the carbon credits in Dubai or the United Arab Emirates. We've seen them really make a push into the metaverse. So it's kind of this interesting dynamic where they're identifying use cases. They're seeing the potential for job creation, and they want to attract that interest. In a world where maybe people are leaving the United States, it's still going to matter, though. So I guess the question is, let's say, the SEC deems most of these assets to be securities. Even though you have these friendly jurisdictions, there will be a downstream impact on price, on where folks can operate. If that were to happen, how disruptive would that be to the overall crypto economy? Luuk,
I can start on that one very, very briefly. I think it's important to kind of remember that the SEC can't just unilaterally determine that something is a security, right? It can certainly take that position, and so as it has done. I think that to kind of look past a lot of the discussions that are ongoing currently with various SEC actions, I think that there might be a little too much focus on this fear of, oh my goodness, at some point in the United States, I think with the exception of Bitcoin and maybe Ethereum, everything else is going to become a security. I think that we're seeing, again, with the bill that was in the Senate, again, it's not going to go anywhere, but just some general discussions. The key consideration is not, my goodness, these are all going to be securities. I think the key consideration is what kind of regulation will ultimately be here in the United States. We certainly acknowledge, the SEC struggle because they are authorized, right, to regulate securities. If something is not a security, they don't have the authority to regulate it. So we certainly understand the arguments they're making and why they're making them. But I think that is, as an industry, and I do know there are some efforts in Washington underway with our industry. I think it's important to kind of look beyond that and not think about, is this going to be a security or not, but just what is the proper regulation for this asset class, regardless of what the terminology is going to be. But to answer your question, if there's some, serious overreach or problematic legislation that ultimately comes down from the U.S., absolutely, it will have a downstream effect, right? So, but again, I think there's opportunity for the crypto industry to work with legislatures to not have that happen.
Luuk, I might have to move in with you in Panama.
Yeah, you're more than welcome.
Yes. Yes. I'm in California, so come on out here first.
I'll stop by on the way down. Is it something, as a business operator, Luuk, that concerns you, or do you feel a bit isolated?
It definitely concerns us. So when it comes to the decision whether or not to add spot trading to our product shelf, these kind of topics are often discussed. So I think in the end, the first consequence of being a security is that the flows, the volumes are going to move offshore out of the US. You've seen that with the XRP discussion. You saw that a lot of platforms delisted spot. Derivatives were traded out of the US. So it heavily impacts US domestic volumes. We don't have US clients or any links to the US, so we don't really directly care. On the other hand, we're not typically looking for problems either. So we tend to shy away from everything that might pose problems in the future. So launching tokens that might at some point be deemed securities by the US, that might be copied by other regulators, it's a problem area. So I think for us, we would focus on the top coins only. Instead of launching new tokens like other platforms do, we would simply make them available for trading, but not launch them, because launching them could be seen as offering securities or have offered securities, but you only realize a few years later. I think the proof of work stake discussion for ETH it doesn't help, I think. So does it really impact ETH? Don't think so. Does it?
But some people do. Some people think just the essence.
Yeah, so the essence of proof of stake might be security, and in that case, some people might not be willing or able to trade it, or trade it differently. So yes, it will impact it. So I hope not. ETH is not like an offering, or it's not like actively offered at the moment. So it's different from when it first launched versus today. So I think the impact for all of this regulation is more for recently listed or to be listed tokens. Those will all be heavily impacted by any of these new rules, but it could also impact older ones. And I'm sure there will be cases where some coins will be deemed securities, and some platforms will be deemed to have offered securities. So that's like an area for us, we try to be lean and mean, and these areas would require like a massive legal and compliance team fighting off these potential cases. So we prefer to stay out of that area.
Justin, do you have a sort of plan in place if maybe regulators were to sort of take some position on Tron being a security? Do you have a game plan for that in the event that hypothetically that could happen?
Yes, I want to chime in. I agree with Mauricio point of view. I think first of all, I think for like SEC or all the US regulators, right? Today, I think mainly it's SEC, how they can regulate the crypto, or crypto is a security or not, I think will be a long like battlefield, right? So I think even for SEC themselves, I wouldn't see like SEC as a whole entity, right? Even inside of SEC, right? Some people probably thinking like we should like take a more friendly approach to crypto, to keep all the crypto innovation happening in the United States. Some probably have a more aggressive approach, right? We want to just, for example, like kill crypto in the United States, make it easier for us. I think there gonna be a long debate. I haven't seen like, and we will have like a very quick results. But for ourselves, right? Since we are like one of the builders in the industry, I think we always want to, even when I talk to regulators, I always want to emphasize on the decentralization, like nature of our crypto, not only because we want to argue with regulators, but this is a fact, right? We have a very robust and vibrant decentralized community. Like basically nothing can kill us. That's like the nature of our community. That's the nature of our crypto in the first place. I remember like back to like 2013, 2014, RMB, CNY, trading volume occupy like 99% of Bitcoin. And also like there's 95% something Bitcoin mining power is all based in China. And everybody is saying, right, one day if Chinese government cease to cease the trading of Bitcoin or cease the mining of Bitcoin, Bitcoin can end in like 6 months or something, right? And then we did see like Chinese government, first of all, like basically cease all the operation of exchange in China, and then later like cease all the miners operation in China as well, which I think even right down even I think worse scenario compared to SEC deem like certain crypto as a security. I think this just like right, SEC require like Coinbase to delist from like NASDAQ and even like cease operation completely. But actually, I think even even worse, right, compared to the scenario we have here. But it doesn't hurt Bitcoin at all. I mean, I will say like in the short term, you know, three months terms, you know, Bitcoin price did crash because of all these kinds of the news, and it's grow back. Right, I think because of the reason is because the future is more important than any regulatory approach taken by certain regulators. That's also I talk to them all the time. That's my point. Try to make here. Crypto and the Bitcoin is the future. It won't basically stop, because any regulators want it to go like someplace else, right? If China, like US, any big regulators embrace crypto, I will say crypto will grow faster, right, than what we expected. But if any country take basically a different approach towards crypto, eventually it will be loss of the country itself, not be the loss of crypto. Because eventually everybody gonna move to Web3, right? Eventually everybody gonna move to crypto. It's just a matter of time, you know. So that's why I have confidence when I talk to regulators, because that's where we're gonna go eventually, right? Just in the matter of time, you're gonna embrace it earlier or right be the latecomers. Yeah, that's my point of view.
And
yeah,
we'll leave it there. I really
yeah, exactly.
This was really great, dynamic, interesting. Mauricio, thanks for stepping up to the plate when my audio got wacky. Gentlemen,
No problem. Thanks, Frank.
until next time.
Thank
for
you.
joining us.
Thank
Guys,
you.
thanks
See
for
you.
having us.
Yeah.